Question 11. Which of the following statements concerning requirements under Standard 5B, communication with clients and prospective clients, is least likely accurate? This standard requires members and candidates to A. Divulge the number of investment-related personnel responsible for external communication. B. Distinguish between fact and opinion in the presentation of investment analysis and recommendations. C. Disclose the basic format and general principles of the investment process. Standard 5B. Communication with clients and prospective clients does not limit the type or number of staff responsible for external communication. The answer is A. Question 12. Gabrielle Gabi, CFA, has been accused of professional misconduct by one of her competitors. The allegations concern Gabi's personal bankruptcy filing 10 years ago when she was a college student and had a large amount of medical bills she could not pay. By not disclosing the bankruptcy filing to her clients, did Gabi most likely violate any CFA Institute standard of professional conduct? A. No. B. Yes, related to misconduct. C. Yes, related to misrepresentation. A personal bankruptcy does not necessarily constitute a violation of Standard 1C, misrepresentation, or Standard 1D, misconduct. If the circumstances of the bankruptcy involved fraudulent or deceitful business conduct, then failing to disclose it may constitute a violation of the standards of professional conduct. The answer is A. Question 13. Chan Liu, CFA, is the new research manager at the Pacific Microcap Fund. Liu observed the following activities after she published a research report on a thinly traded microcap stock that included a buy recommendation. Pacific traders purchased the stock for Pacific's proprietary account and then purchased the same stock for all client accounts, and Pacific Marketing Department employees disseminated positive but false information about the stock in widely read internet forums. Liu notes the stock's price increased more than 50% within a period of 2 days and was then sold for Pacific's account. Which of the following steps is most appropriate for Liu to take to avoid violating the CFA Institute standard of professional conduct? A. Remove her name from the microcap stock research report. B. Publicly refute the false information posted on internet forums. C. Report the observed activities to her employer. Certain staff at Liu's employer appear to be engaged in front-running, a violation of Standard 6B, priority of transactions, and market manipulation, a violation of Standard 2B, market manipulation. If Liu observes these violations without taking steps to notify her employer, she will be in violation of Standard 1A, knowledge of the law. Liu should know that the conduct observed is likely a violation of applicable laws, rules, and regulations, as well as a violation of the CFA Institute standards of professional conduct. Her first step, therefore, should be to attempt to stop the behavior by bringing it to the attention of the employer through a supervisor or the firm's compliance department. Inaction may be construed as participation or assistance in the illegal or unethical conduct. The answer is C. Question 14. Francesca Danda, CFA, and Grace Rutter-Binwa work in the same department for new age managers, with Rutter-Binwa reporting to Danda. Danda learns that Rutter-Binwa received a notice of inquiry from the Professional Conduct Program at CFA Institute regarding a potential cheating violation when she sat for the CFA exam in May. As Rutter-Binwa's supervisor, Danda is afraid that Rutter-Binwa's behavior will be seen as a violation of the code and standards. Does Danda most likely have cause for concern? A. No, not until Rutter-Binwa is found guilty of cheating. B. Yes. C. No, because her responsibilities do not apply. A supervisor's responsibilities relate to detecting and preventing violations by anyone subject to their supervision or authority regarding activities they supervise. Danda had no way of detecting and preventing Rutter-Binwa from cheating during the CFA exam, if in fact that is what she did, because it was an event she did not attend. The answer is C. Question 15. According to the GIPS standards, for periods beginning on or after 1st January 2011, the aggregate fair value of total firm assets most likely includes all: A. Fee-paying discretionary accounts. B. Fee and non-fee paying discretionary accounts. C. Fee and no-fee paying discretionary and non-discretionary accounts. For periods beginning on or after 1st January 2011, total firm assets must include the aggregate fair value of all discretionary and non-discretionary assets managed by the firm. This includes both fee-paying and non-fee-paying portfolios. The answer is C.